Daily Fiscal Pulse for the 7th of May, 2026. We're analyzing Thursday's settled data here, not projections or real-time figures. Let's start with the broader context. The headline story is no clear dominant narrative. You're seeing a lot of talk about Intel and AMD shares rallying while Nvidia trails. This whole changing of the guard in AI narrative, that's definitely influencing price moves. But headlines don't always match what flows tell us. So let's dig into the actual numbers. The net fiscal transfer for the session came in at $11.7 billion, driven primarily by tax receipts pulling in $4.7 billion. At first glance, nothing jumps out as unusual. The S&P 500 futures paint a different picture. ES closed at 7,364, staying above the 20-day moving average of 7,158. The 20-day trading range spans roughly 584 points. Despite fiscal headwinds, price is holding its ground. Pulling back reveals the real story though. Government spending's 5-day average is running at $20.5 billion daily. Stack that against the 20-day average of $14.8 billion and you see more capital flowing out to households and eventually into markets. The year-over-year picture reinforces this. Through the same point in the fiscal year, spending totals $810.5 billion, approximately 29% lower than last year's comparable period. That's a significant dial back in fiscal stimulus, and it does affect how much liquidity is sloshing around. From a positioning angle, the fiscal setup isn't signaling a clear advantage either way right now. Our conditions gauge is sitting at +10. Here's the thing though. We've been in similar spots repeatedly, and historically the S&P has still managed to average around plus 0.7% over the next month despite tighter liquidity. Markets don't need fiscal support to move higher, they grind upward plenty of times anyway. That said, there's something worth noting on positioning. Leveraged funds have been cutting exposure. When that happens at current levels, it's historically served more as a caution than a buy signal. A couple scheduled flows coming up could move the needle. The SSA payment cycle hits on the 13th of May, second Wednesday of the month, and that typically affects short-term flows. Around the 15th of May, the next big Treasury coupon interest payment window opens. Right now there's no strong fiscal signal in either direction. The flows we have lined up will tell us whether that changes. That's what we're tracking.